equity purchase price. Next thing we need is book value of equity, which is basically total shareholders' equity from the balance sheet. But instead of just linking to that, the one thing I want to do, this says less book value of equity, so I want this to be reflected as a negative. So instead of saying equals, what I want to say is minus B43. And once we have these two numbers, 169.2 for the equity purchase price, minus 104 for the book value of equity, we can just add those up. And it should give you goodwill, new goodwill, of $65.2 million associated with this transaction. So we're going to link to that in a moment up above. Then the other item we're linking to from above is amortizable intangibles. It used to be, until last December or so, until December of 2008, that all transaction-related fees could be capitalized, they could be booked on the balance sheet and amortized over time. Now, the Accounting Standards Board has ruled that only financing fees can be actually booked as an asset, as an intangible on the balance sheet and amortized over time. Any other deal fees, and that's going to come into play in a minute, so our investment banking fees or legal fees or other costs, any other deal fees like those need to be expensed, either in the time period leading up to closing as they're incurred or at closing. All right. So of our $14 million in fees, the financing fees can be capitalized, the others need to be expensed. All right. So for our financing fees, I want to say equals. We're going to link to our source and use to B as in boy 18, 8 million. And then we'll link to that again, cell B60. You can either do a quick alt equals. It's really not a sum of one number, but our new intangible assets, 8 million.
Financing fees is 8 million,
Right.
right? And then the new intangible assets as well?
You can say either equals B59, or you can say alt equals. It's just the same number. So for my amortizable intangibles, I'm going to say equals B as in boy 60. For my goodwill, I'm going to say B 54. So in other words, we're capitalizing 8 million of fees, we're creating another 65.2 million of goodwill. So at the end of the day, when we add up our original goodwill plus our new goodwill, we'll have a little over 70 million of goodwill on our pro forma balance sheet. Now for total assets, we can copy and paste. And you should get total adjustments to our assets of 73.2 million. So we've made 73.2 million of positive adjustments to the asset side of our balance sheet. What's that tell you on the liabilities and equity side? Well, we're going to make how much in adjustments to the right side of the balance sheet? 73.2. Balance sheet always has to balance. So we're going to make the same amount of adjustments overall down here as we made up here. Let's move on to the liability side. Just as with our working capital assets, we're making no adjustments to our working capital liabilities. So for AP, accrued liabilities, other current liabilities, those are each 0 in the adjustments column. And then sum those up for total current liabilities. We want that to be alt equals for sum, or you can copy and paste from the historical balance sheet, either way. And now we'll move on to examine our existing debt. What did we say about the old debt of the company? What happens to it in the transaction? It gets refinanced. It gets paid off. All right, so for each of these items, it goes away. So for each of these items, we want to say minus, in the case of the revolver, for example, minus B27. You can use a fill down command. The goal here is when we add column B to column D, the result in column F, our pro forma balance sheet, will be that the old debt or the existing debt is zeroed out. Let's do the new debt. All right. The new debt, remember, we're borrowing in connection with the transaction. We're borrowing so we can fund the deal. So what we're going to do for each line item, we're going to refer back to our source and use table to pick up the opening balance from our capitalization. So for revolving credit equals control page up, F17. And then you can use a fill down to pick up the balance for the term loans, senior bonds, and unsecured notes. So control D to fill down, F9 to recalc, and you should get 0 for the revolver, 120 for the term loan, 90 for the senior bonds, 60 for the unsecured debt. All right, and no changes to our other liabilities, so 0 for that. And you can copy and paste the formula for total liabilities over into this column, into the adjustments column. And so far, our pro forma balance sheet adjustments should reflect 79.2 to the total liabilities. And then the last adjustments we need to make are going to be to our shareholders' equity section. Before we do that, before we make any adjustments to retained earnings, I want you to scroll down a little further in your model to the very bottom where you see transaction fees excluding financing fees. Remember what I said a moment ago. FASB recently ruled we can only capitalize financing fees. All the other fees need to be expensed at closing. The way we're going to expense these, we've talked to a few accountants and they told us this is the best way to do it here for teaching purposes. We're going to expense these through retained earnings. So in other words, we're going to buy out the old retained earnings of the company. We're also going to expense the other $6 million of transaction fees that we were not able to capitalize. In other words, we're going to actually have a deficit net worth at closing equal to the amount of these fees. Does that make sense? Okay, we'll see that in a minute. For now, let's just link up so we can capture the amount of these fees. And just like we did for financing fees for banking, we're going to say equals B19 on the source and use. And we can copy Alt ESF to paste. Should get $4 million for investment banking fees, $1 million each for legal and other fees and expenses. When we sum those items up, obviously we get $6 million. And we're going to link to this in a moment when we expense these through retained earnings. All right. Let's go back up to retained earnings. And remember what happens before we deal with the fees. Remember what happens to the existing equity of the company. It's kind of like the old debt. We're buying out the old equity holders. So these items first need to go away. First thing we would need to do for the retained earnings, we want to say minus B41. We've bought out the old retained earnings. Now we need to expense those fees. So we'll also say minus B68. So you should get a total adjustment of negative 100 million. So if we add the old retained earnings of 94, subtract 100 million, like I said before, we'll have an opening deficit net worth of 6 million. Okay, same thing with the old common stock. We want to subtract that, it's going away. But remember, there's also another transaction that's occurring in the common stock. We're putting equity into the company. So we want to subtract the old common stock, but we also want to add the sponsor equity. Just like we added all these new pieces of debt to the new debt section, we need to account for the equity that we're injecting into the company. We need to add that 104 million. All right, so the total adjustment on the common stock line should be a positive 94. Then the total adjustments to our shareholders' equity, we can sum those up. Total adjustments are minus 6. And then we can copy the formula for total liabilities and equity from the historical column, copy it to our adjustments column, and just like we said earlier, when you copy and paste it, hit F9 to recalc, we will have made $73.2 million of positive adjustments to the total liabilities and equity side, and our check figure should be 0. Basically, the balance sheet gets bigger, gets larger by $73.2 million as a result of the deal. Now the last thing we need to do for each line item is we need to add the historical column to whatever adjustments we've made to get our opening balance. Right, that is, what does the balance sheet look like immediately after the transaction has occurred? So for each line item, we can take the sum of, well, for cash anyway, the sum of B6 through D6. We're just adding those up. Copy, paste special formulas, and then you can copy your subtotal for current assets, paste that, also using a paste special formula. We want to preserve the borders, we want to preserve the underlines, want to preserve all the formatting that we have in this column already. Otherwise, we're going to have to go back and reformat it. So all your pastes should be paste special formulas, Alt-ESF. And we're just going to work our way down. We're going to do that same thing for every line item. And again, I do like to calculate the subtotals right there in line. Just make sure I've got all the right numbers. Just kind of another check that I like to build into the model. When you get down to your total assets line, it should be 383.4. Once you've got that done, it's a good time to save. We're actually running a little bit ahead of time, so what we're going to do is we're actually going to drop the pro forma balance sheet. We're going to integrate it into our model tab, and we'll stop at that point and then pick up from there tomorrow. For all intents and purposes, going forward, the historical balance sheet of the company basically now worthless. All right, so when we look at the old historical balance sheet, we look at their debt, their equity, remember those items are gone. It's old revolver, old term loan, old unsecured debt, old retained earnings, old common stock, gone. Okay, and in the real world, there might be some additional purchase price adjustments that affect the working capital or the fixed assets of the company. So going forward, especially where it relates to the cash flow, where we're keying off changes in the balance sheet accounts, all those changes need to be driven off of the pro forma balance sheet, not the historical. Right, for that reason, what we're going to do is drop the new balance sheet into our model and then move forward keying off of that. And that'll make more sense in a moment if it doesn't already. But first thing I want to do here on my model tab is if you go to column H, you can put your cursor in any cell within column H. The first thing I want to do is insert a column. I need to first make space for my pro forma balance sheet. We do that by inserting a column, Alt-IC. And now you should have a blank or an empty column in row H. All right, so insert column, Alt-IC. Remember, we can also insert a row using Alt-IR. We're going to do that in a moment. All right, so if you don't already have these in your notes, make sure you get them because they are valuable. Now this column, again, I mentioned we made space for the pro forma balance sheet. The pro forma balance sheet is the only thing we're going to put in this column. Remember, balance sheet represents a moment in time. It's a snapshot. It's that split second where the transaction has closed, but there is no such thing really as a pro forma. We're not adjusting the old income statement. We're not adjusting the old cash flow. We're not adjusting the old debt schedule. The only thing we're going to house in this column is our pro forma balance sheet. And we'll deal with that in a minute. The first thing I want to do, before I do anything else, I want to copy all the formatting in column G. And if you want to quickly select column G, you can actually left arrow, go up to where it says G, left arrow key once on that. or left click, whatever you want to call it. You should be able to select that entire column. Control C to copy. Now go over to column H in that first cell. I want to use the paste special formats command. Different than paste special formulas that we've been using. Paste special formats, Alt E S T is in Thomas. And this will paste only the formats in column G. You hit enter. Now what you should see is you should see a nice dotted line going down the right side of column H. That's mainly what I wanted to capture here. And we do that, we put the dotted line on either side of that column really to set it apart from the rest of the model and show the reader that it's where we're going to house our pro forma balance sheet. Right, now what I want to do here is I also want to label this new column so there's no question in the reader's mind or the client's mind as to what's in this column. First thing I want to do is go to cell H4. I want to type in pro forma. And then in H5, I'm going to type in 2008 PF for pro forma. Just make it overly clear what this is going to represent. And you'll see this not just in LBOs, but also in M&A. When company acquires another, there'll be a combined balance sheet post-closing, pro forma balance sheet that gets dropped into a model. We'll see that next week when we start talking a little bit about M&A. We're not going to do one in class, but I'll introduce the concept of a full merger model, and I'll show you where a pro forma balance sheet would go. But my point is, you'd have this in LBOs, you'd have it in M&A. Right, well, again, this column, again, is only going to house the pro forma balance sheet to make it overly clear to the reader that that's the only thing that's supposed to be here. I'm going to actually black out all of the cells in my income statement, all of the cells in my cash flow, all of the cells in the debt schedule, just so they know there's not supposed to be anything there. It's kind of like if you've ever read legal documents, you'll see a blank page and it'll say this page intentionally left blank. It's kind of the same idea here. We're leaving the income statement blank. There's no such thing as a pro forma income statement. Okay, so what I did was I selected the entire income statement. To select multiple cells, hold down Shift, use your down arrow key, all the way down to the end of the income statement. And you can use that little paint can. It's the one time I'll let people use their mouse. There is a way to do that with keystrokes, but it's actually, I think, even quicker if you do the mouse in this case. All right, so select that little paint can icon, select black, and your income statement should be blacked out. I want you to scroll past your balance sheet. Leave your balance sheet alone for right now. Go down to your cash flow. Select all the cells in your cash flow, all the cells in your debt schedule. And now, because the last command that we used was to fill those cells with black, you can redo that command by using the shortcut Control-Y. Control-Y will redo the last command you did.